The Caribbean region continues to recover from last year's hurricanes, not just from the physical damage, but also from the lost tourism revenue. AM Best has released 2 reports on the region, its 8th annual survey of the Caribbean Association of Insurance Regulators, and a look at how the market fared in 2017. With us to discuss these reports is Meg Mulry, Associate Director and Senior Economist, and Ricardo Longchallon, a Senior Financial Analyst. And Meg, the CARE survey indicates that 2016 was a pretty solid year for the market. Were the cat events of 2017 having any sort of setback on the market, however?
So, like you said, we surveyed the 2016 data. The data is 18 months delayed because we get it directly from the regulators. So what we saw was that while the region was less profitable than it had been the previous year, it was on solid footing heading into the traumatic events of 2017 in terms of the very destructive hurricanes that we saw. Ricky, however, has very good updated information from the regional and multinational players that we've been rating down there.
The 2017 events was really largely an earnings event for the Caribbean rated reinsurers. Net income dropped more than 99% as a result of the storms. The reinsurance programs are very conservative. So what that meant in terms of surplus was just a 4% drop. So it has been for them very negligible in terms of what the impact was to surplus.
Now, how have the catastrophic events of 2017 affected the impacted insurers' relationships with reinsurers in terms of things like pricing, et cetera?
Well, they maintain very strong insurer-reinsurer relationships in the Caribbean. In many instances, these relationships have existed for decades. Overall, it has been very profitable business for the reinsurers over this period of time. And despite the damages last year, reinsurance capacity is still very much available in the Caribbean. So in terms of the terms, there's very little changes that occurred during 2018. What they did see is pricing increases. In the affected areas, pricing may have increased by as much as 50%. In the non-affected areas, it increased like 10%.
Meg, do you expect that the region's economic outlook will have any impact on insurers, positive or negative?
I would think it would be, slightly positive. What we're seeing going forward is that the region is expected to grow in 2018 and 19 right now, broadly divided into tourism-driven economies, which are benefiting from global growth, and tourism arrivals have been up across the region, except for with obviously the obvious exception of the hurricane-hit areas. And oil prices have been rebounded, so countries like Suriname and Trinidad, who are commodity-driven economies, have actually benefited. So we see that is definitely going to be a clear positive. Obviously, a lot of these regions are looking to increase insurance penetration in the wake of this. Obviously, we've seen some uptake, a little bit more uptake, but increase in economic losses that we saw in 2017 hopefully will be offset with increased insurance penetration going forward.
How are the multinationals looking at the country risk in the region?
Country risk in the region, we look at it from an AM Best perspective. We look at country risk between the economic, political, and financial system risk. So in terms of politically, the region is largely stable, which is a positive. However, the economies, as we have seen, are very dependent on tourism, which is a global demand shift that has very little to do with actual economies, local economies, as well as commodity-driven economies, which are globally driven as well. So they don't have a lot of control over that. In terms of financial system risk, we have seen sort of an uptick there. Barbados this month defaulted on their sovereign debt, which could have some impacts and some throughout the region, not only in the banking system, but also in the insurance sector as well. And multinationals are much more focused on transparency. So whether it be ERM or those kind of functions coming through. So operating in smaller jurisdictions that might not be as transparent is a challenge. One of the things I think that the regulators are trying to do is to better harmonize some of the regulation to make it less burdensome to do business in the region. And that would actually go a long way, I think, in attracting either microinsurance to the region or increasing transparency, which could broaden the product offerings to the islands.
Ricky, if 2018 were to look anything like 2017 when it comes to catastrophic events, what do you think the fallout would be for insurers?
I would note first that, Caribbean Insurance maintained comprehensive reinsurance programs, which is designed to protect surplus, and that was shown and demonstrated last year, where, like I said, there was just a small 4% drop in surplus. The expectation, if that were to happen, would be that the results would be similar to 2017. Reinsurers would again bear most of the losses in the region, as they did in 2017. And rated Caribbean insurance will remain well capitalized. A likely scenario would see insurers passing along these costs to the insurers, I'm sorry. And if the insurers were in turn to pass that on to the consumer, then you might see hardening markets, going forward 2019 and beyond.
Thanks, Ricky. Thanks, Meg.
Thanks, John.
Thanks, John.
You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.